Hi and welcome to this tutorial. In this tutorial I will show you how to perform a currency strength analysis for swing trading purposes. As you can see on the right side of my workspace, I have three instances of the currency strength utility. At the top I have a long-term currency strength reading. In the middle I have a medium-term currency strength reading. And at the bottom I have a short-term currency strength reading. Now on the left side I have a currency pair chart, and at the bottom I have three instances of the currency strength utility overlapping one another. So if we start at the top here and have a look at the long-term currency strength settings, what I have done here, I have taken the indicator and told it to look at daily currency strength information, and I want to look at 252 daily currency strength readings. So this is the look back, and so the currency strength you can see here on the right hand side is currency strength compared to currency strength 252 days ago. And I have a visible period count of 240, and I've zoomed in just a little bit just so we can have like a really good overview of the direction of the individual currencies. As you can see here, if we look at the top one, the American dollar, from all the way back to the beginning of this period has been moving higher, and now it's just over the recent, most recent perhaps week or 2 weeks started to sell off just a little. And the euro has been very, very weak, and now it's starting to pick up here over the past week or so. I have set the enable static period to true, and the static period is set to D1, which corresponds to the daily button in your MT4 platform. And then we have our long-term currency strength utility configured and ready. The middle window, or the medium-term currency strength information, is set to 126 period look back, so 126 days back. I have a visible period count of 120 so that I can space these out just a little bit and see the minor details in the swings up and the swings down. And I've of course set the enable static period to true, and the static period is again D1, or daily information. And so here you can see that previously on the long term we've had a very strong dollar, and recently over the past week or two we've had, you can see that the dollar is selling off, and this becomes more visible here. You can see that the dollar has been selling off for a couple of weeks now, and this you can see as the dollar starts to drift lower just here. If we look at the short term currency strength information, I'm looking at 21 days. So the currency strength at the rightmost edge of the chart is currency strength now compared to currency strength 21 days ago. And I've set the visible period count to 29 just so that it lines up roughly with the end of the two upper windows. And I set the enable static period to true and the static period to D1, which again corresponds to the daily button. And this shows me early signs of changes in currency strength. So you can see here the dollar is strong, starting to slow down on the long term. The medium term we can see that the dollar is actually slowing down, and on the short term we can see that the dollar is actually below the zero line, and together with New Zealand dollar, which is very weak at the moment, and the yen, which is also weak, currently weak. And so it is actually one of the three weakest currencies at the moment compared to the daily currency strength readings over the past 3 weeks. So this is very interesting for us. On the left side of the chart here I have my currency pair chart. This is the 4-hour chart, and at the bottom I have three instances of the indicator settings, which are identical to the long term, medium term, and the short term, where the fat line here, the thicker line, corresponds to the 252 periods of days, and the medium term corresponds to the 126, which is this middle window here. Again, the enable static period is set to true, and the static period is the D1, which is the daily information, and the thin line here is the 21. And again, on all three instances I have set display active currencies only to true, so we are only going to view the currencies that are a part of the pair that we're looking at. So here you can see Australian dollar, US dollar. The Australian dollar is orange and the US dollar is green. So if we drag the euro US dollar over, you can see that these change nicely. If we go to the daily chart here, you can see that the euro is starting to pick up here towards the end, and we can see that the dollar is strong, but the more recent strength information, you can see that the dollar has gone below the zero line and the euro has gone above the zero line and actually crossed above the dollar line. So this is why you can see this nice rally here on the euro US dollar. But if we have a quick look at some different pairs here, if we have a look at the Swiss franc, which is the lime green line, and then this one here, which is the orange, which is the Australian dollar, and we move down to the medium term, what are things looking like there? Well, yes, we can still see we have the franc, which is strong and gaining in strength compared to the Australian dollar, and the Australian dollar is weak. And if you look here on the bottom, the short term, you can see that we have had the Australian dollar actually cross over above the Swiss franc, which tells us that there is some kind of a pullback. So if we go to the Australian dollar Swiss franc, we can find that Australian dollar Swiss franc, here we are. And so we want to be selling this currency pair, so we want to sell here, and you can see the Australian dollar crossed above the Swiss franc, which shows us again there's a bit of a pullback, and that you can see here, this is the pullback that we've looked at here, and price pullbacked into this lovely supply area, which is likely a Fibonacci level, maybe an 80 or a 70, 79. Yes, between the two here, but you can see it's nested in this nice area of consolidation just here. So if we draw a rectangle here from the top of that bar to the bottom of that one, I'll just explain this properly. This lasts a bullish bar here. We want to draw the resistance area from the wick, from the high to the low. So we'll do that quickly. So we'll move this to the high, and to the low is just here. And we want to project this into the future, and so this is where we ultimately want to go into sell. So we want to sell somewhere here, and you can either take the bottom or the middle of this bar here, or the top, but ideally you want to get towards the bottom and you want your stop to be above somewhere. So if we, let's say, had our entry at the bottom of this box here at 76.60, our stop would have to be about 100 pips just to keep it above this swing high and to keep us out of trouble. So that was a very nice example here of currency strength divergence and the pullback, which was identified by the thin lines crossing over. If we have a look at another example quickly, what else do we have? We can see here that the Kiwi, which is a brown line, is selling off, and what do we have that's picking up? We have the Canadian dollar, which is picking up. It's not a terribly exciting example or very pretty, but we can see the CAD is stronger than the Kiwi here. We have the Kiwi moving lower here and the CAD picking up, and we have the CAD above the Kiwi here. So let's look at the CAD Kiwi here for the sake of example. CAD, here we are. So we're looking for Kiwi strength, so we're looking for this pair to be moving lower. Okay, so let's have a quick look. This would be considered a very early sign, because if you look at the information here, it's not very clean. Here you can still see that we have the Kiwi getting weaker and the CAD getting stronger, but they haven't crossed, so there's no commitment. But on the long term we can see that there certainly is, and on the shorter term we see that there is indeed. So if we zoom in here a little bit and have a look at what's going on, you can see that right here is when the long-term lines crossed. Let's find where it crossed over. It actually crossed over when it was crossed. So here we had the cross on this bar right here. So we'll put an arrow there on this one here. So this one here, on this bar, we had CAD strength, Aussie weakness. So what do we do here? Well, then we need to watch the smaller and the faster lines to move to support this. So the longer term, we want to be, we've confirmed a short on the close of this day. If we look lower here, we can see that we have, on the shorter term, we've had the CAD move above the Kiwi all the way back here. And on the shorter term, we can see that the Kiwi is still stronger than the CAD. and so this might be a questionable entry, but due to the fact that price came onto this nice level of resistance here, which is a supply level from all the way back here, which has been respected many times before, this would most certainly be a nice entry, but we wouldn't have known this or seen this until this day had closed. Let's have a look. You can see the beginning of the CAD strength and the Kiwi weakness on the day before. So on the close, if we couldn't see past this candle here, you would still see that the CAD was indeed stronger than the Kiwi when this bullish bar closed. So you could perhaps sell into a rally as price moved up to this lovely supply level here and put your stop above this previous swing high, which put you at about 100 pips, and then just follow this down. Well, that was another example. I don't think there's much else here, any more clean readings, but I think we'll leave it at that for the time being. So this again is a currency strength analysis for swing trading purposes. Thank you very much for watching.